Hello, Michael Pascoe. There was both sense and nonsense in the market dive today. Totally reasonable that gold miners and the gold price should be down. Rather silly, the reaction to some key Chinese economic statistics. Let's deal with gold first. Look, the gold price has had some fundamentals going for it. When you've got the Americans, the Japanese and the Europeans debasing their currencies by printing them, it makes sense for people to want to get out of those currencies into gold. But after that initial surge, momentum trading tends to take over. At some point, the gold price started rising because the gold price was rising. And you had the expansion of the ETFs, the exchange-traded funds, democratising gold, allowing everyone to have a punt at keeping some gold in their locker. Well, that's all good until that momentum trading runs out of puff. Gold's done nothing now in price terms for nearly 2 years. And once people realise that that's possible, that the trend has lost some of its puff, it makes sense for the hot money to get the hell out. The technical support for gold, for those who believe in the power of the graph to drive markets, deserted it at the end of last week, so it was reasonable for it to fall today, and therefore, of course, the gold miners here have to reflect the dint in their profits that flows from a lower gold price. As for the broader reaction, though, to China's economics figures, is stupid, really stupid. Look, China had economic growth of 7.7% in the March quarter. The world's second biggest economy is growing at a very fast rate. Not growing at as fast a rate as some analysts were predicting, those who were saying it was going to be an 8% figure, but 7.7%, 8%, it doesn't really matter when the beast is that big. Particularly if you have a look at the breakdown of some of the individual key figures. Yes, industrial production for March was up by 8.9%. Analysts have been tipping maybe 10%. So what's happened here is the analysts have got it wrong and the markets reacted as if there was something wrong with China. No, industrial production growth of around 9% when the industrial base is that big is still very strong. Retail sales growth in March was 12.6%, a fraction more than the analysts were predicting, and that's where the next phase of China's economic evolution, revolution and miracle really takes place. The fixed asset investment figure, 20.9%, again, extremely strong, just not quite as strong as some were hoping. Look through the headlines, look through analysts getting it wrong, and ask yourself about the strength of the Chinese economy. The commissars are saying it's going to grow by 7.5% this year. That means they want to do a little bit better than that. Therefore, 7.7, thereabouts, is a perfectly healthy figure. We are still part of the Chinese economy, and it's a very nice place to be.